tariffs are not terrifying to begin. There are a few reasons why you might expect a relatively sanguine medium-term outcome. One is that you have to think about tariffs in the context of the broader constellation of trade disputes. Okay, so a few months ago we were saying, well, we have NAFTA on fire. You know, we have a situation with Europe. We have auto tariffs in the pipeline, and of course China. Now there's been some resolution on those other ones to some extent. At least they're moving in the right direction. So in line with the view that the medium-term outcome is one of negotiated solutions, the question in terms of China is whether this dispute goes on long enough to cause enough damage to the U.S. economy before you get that medium-term bilateral resolution. And that's where I think the tension lies in this latest round of tariffs. So $200 billion, I mean, going back to Kudlow's comments, there's a reason we haven't seen tariffs affect the economy thus far. It's because they've been relatively narrow and relatively small. $200 billion is different. It's broader, and those are products that are not the low-hanging fruit of protectionism. Those are ones where American companies depend on China quite a bit for, and so the effects of those tariffs is will be broader.
When you leap from putting tariffs on roughly a tenth of the Chinese exports to the United States, or $50 billion, and then you quadruple that, and you're coming up to close to half subject to tariff.
But it's not
that's a different thing.
Not just the dollar amount, but it's about the share of Chinese exports that are in those product groups. And so for the initial $34 billion tranche, only about 6% came from China. So relatively easy for U.S. firms.
Where's the off-ramp here? Where's the off-ramp? You see one?
Well, I see. This has to stabilize. The worst case scenario is that this stabilizes and reverts into the background after this latest tranche. The best case scenario is that you do get a bilateral resolution for this trade dispute. But there's no way you can keep on self-inflicting those wounds via escalation in these types of magnitudes.
Barry James, we want to bring you into the conversation here. As we talk about what Ben just spoke about, is there any reason to think that the trade playing out the way it has, small cap, domestically focused companies benefiting at the expense of large cap multinationals, does that continue to play out, or is there hope or optimism that a deal can get done and benefit the entire market cap spectrum?
I don't think there's much hope for that shift until we really see some negotiations that come to fruition. I view this a little bit as, you know, the kids on the playground and they're playing keep away. And we're saying we're going to keep it for ourselves, maybe even go home. And you look around the globe, bonds haven't done well, international hasn't done well, emerging markets are in a bear market. The only thing that's really been working has been our stock market, and it's been narrow within that as well. What's interesting from an investment standpoint is the change we've seen just recently in the last 3 months. It's become a little more defensive. Healthcare and utilities, strange, but those have been leading the market. So I think the market's starting to take into account some of the possibilities of this, and I don't think the long-term results would be very good if it really does come to fruition.